First of all, give us your thoughts on the sentiment on the ground right now, because I mean, you're a trader, you feel it, you are there on the floor, you're there on trading terminals. What's the mood like for equities right now? We know that the market is already dealing with high interest rates. The fixed income side is looking very attractive. You can get 20% on a one-year government paper, for instance. What's the mood like for equities today?
I mean, it's pretty much mixed. We're seeing a bit of interest, mostly from international investors. The domestic institutional investors, the traditional investors in the local market are still on the sidelines. Just like you rightly said, given the sort of high interest rate environment we're seeing, mostly for fixed income instruments. So a lot of them are still on the sidelines and a bit of selling. But by and large, we see a bit of strong international interest in the market, just given where the GDP is at the moment.
And let's come back to yesterday's trading performance. Dangote down 5%, WAPCO down 5%. What's the story there? The worst day this year so far, when we thought we're hopefully getting to grips with the problems of last year and perhaps have a much better year this year.
I think we did see a bit of profit taking, not just in building materials, but across most consumer goods. I mean, we did see a bit of profit taking in Nigerian breweries and Guinness as well. You have to understand that in the past couple of weeks, this sector of the market have been trading up significantly. We've seen WAPCO trade from somewhere around 35 in December to 45.50. So there's a bit of profit taking, and perhaps that's the reason why we did see the sort of fall we saw in Dangote as well as in Lafarge WAPCO. But by and large, we don't think it's anything that we should be concerned about. Lafarge WAPCO still offers tremendous buying opportunities. So I think for those who have a long-term view, this is a very good time to be buying these stocks.
Right, so the banking sector is really what has been dragging the market down. And UBA, obviously, the big news around their profit warning is what has been really setting the tone for that sector. Yesterday, though, we saw the UBA up 4.8%. Very strong performance after we've seen it come down pretty much every day since the profit warning. Do you think that we're now seeing a floor for that share price?
Yeah, it does look like we've seen the bottom for the UBA. We've been seeing tremendous buying appetite for the stock in spite of the profit warnings. Prices have come down significantly, but on large volumes, which obviously is an indication that people are buying the stock. And if you look at the PE of 2 times, price to book of 0.3, it does look like an interesting buy for someone that has a long-term view of the market. And perhaps that's the reason why we did see quite significant interest in the stock yesterday. The price trading up, it did go down to somewhere around 1.62, but it managed to close up about 4.8% higher at the close of the day. And if you look at the UBA, the stock last year lost over 65%, and year-to-date loss is somewhere around 22%. But so it does look like it's seen its worst going into the market.
Right, okay, let's come back to sentiment. International investors are really what are defining the market today. Locals are sitting on the sidelines to a large extent. You obviously deal a lot with those investors. What are they saying right now about the opportunity in Nigeria? And what type of investors are really coming to the fore?
Well, if you look at Nigeria compared to other frontier markets, Nigeria still offers a very significant opportunity. GDP last year was 7.7, slightly down from 7.8 the year before. I mean, compared to the rest of emerging markets with GDP growth of about 4.8 and where developed markets are somewhere around 3.8, it does look like Nigeria is an interesting play. We're seeing strong sector reforms, the power reforms, petroleum industry bill. I think all these are positive for the country, and the bit of political stability we've seen in the past couple of years all point to the fact that Nigeria does look like an interesting play at the moment. And we're seeing a mix of investors across geographies, from the traditional US players to European investors to Middle East investors. And I think also what the exchange is doing in terms of introducing new products, like they recently introduced exchange-traded funds, should to a large extent bring a different class of investors into the market. So we're quite excited that the internationals are buying, and they're not just seeing the high short-term interest rates as a deterrent to the market.
But the flows are not the levels people are anticipating. I mean, looking at the valuation of this market, we'll have thought we should say a lot more.
Yeah, I mean, given where the valuations are, the reason why it doesn't look like it's showing, the market is down now from last year we did about, daily average was about $16 million. The year before was about $25 million. Year to date, we're seeing daily average of about $11 million. I mean, it's clear it's because the domestic institutional investors haven't been playing much in the market just because of high interest rate. But we don't think that's a sustainable trend to observe. We do think that the market should trade up with interest. Once we begin to see results from the banks, and we do expect positive results from the banks, we do believe that should, to a large extent, improve the market liquidity.